everyone, and welcome back to the Wisdom by Harry YouTube channel. My name is Harry.
And I'm Mary. We're so excited to have you here today for another fascinating episode. Today's topic, well, let's just say it's kind of a big one.
Yeah, understatement of the year, maybe.
It really might be. We're diving into the, what some are calling Liberation Day tariffs that the U.S. just dropped on pretty much, well, everyone.
Yeah, I mean, the scope of these is pretty remarkable. They're hitting tons of trading partners, and we're not talking small potatoes here. Some countries are looking at rates up to 50%, which is just enormous. Think about what that could mean for, prices on everyday stuff.
Right, and that's exactly why we're doing this deep dive, because this isn't some far-off political thing. This is going to affect everybody listening. You're going to feel this in your wallet, at the store, everywhere.
Yeah, absolutely. We're talking potential price hikes on all sorts of goods.
Yeah.
And that's just the tip of the iceberg, right? This could really shake up the entire global economy, supply chains, manufacturing, the whole 9 yards.
So we've been digging through all the reports, analysis, official statements, trying to get a clear picture of what this all means. What's the rationale here? What are the potential consequences? What are people saying around the world?
Right, and what might happen next?
Yeah.
Which is the million-dollar question at this point.
Exactly. So let's start with the announcement itself. April 2nd, that's when it all went down, and they used this term, Liberation Day tariffs.
It's loaded language, right?
Absolutely. I mean, it signals a pretty deliberate shift in how the U.S. is framing this whole thing. And the idea that's coming through loud and clear is that they're moving away from the system where trade policy was kind of dictated by alliances and geopolitical relationships.
Right, it was about who your friends were, you scratch my back, I'll scratch yours, that kind of thing.
Yeah, exactly. And now it seems to be all about the bottom line, the balance of trade, deficits and surpluses, who's buying more from whom. And it's a pretty stark example of this when you see that Japan, a close U.S. ally, is getting hit with a higher tariff rate than Iran. Yeah, that really drives the point home. So it's a fundamental change in how the game is being played. And the other thing that's pretty shocking is the timeline. I mean, these tariffs could be in effect within a week, right?
Early April 2025.
Yeah.
Which would mean the U.S. would have its highest average tariff rate in over a century. We're talking exceeding even the Smoot-Hawley tariffs from the 1930s. And, those are infamous for making the Great Depression even worse.
Yikes. So what was the message from the U.S. to everyone else as this was all going down? Did they try to soften the blow?
Well, Treasury Secretary Bessent, he basically said, everyone just chill out, don't retaliate right away, let's see how this plays out. But that's not exactly what's happening, is it?
Not even close. And the other big takeaway from all of this is that the U.S. basically declared that the current global trading system, which they were largely responsible for creating after World War II, is broken.
Yet no longer works, is
Wow.
how they put it. It's a pretty huge statement. It basically says they're not satisfied with how global trade is currently structured, and they're ready to tear things up and start over.
So how did the rest of the world react to all of this?
Well, let's just say the markets were not pleased.
Yeah, Monday, April 7th was a bloodbath. Hong Kong's Hang Seng Index plunged over 12%, its worst day in years. Taiwan's TAIX down almost 10%. Japan's Nikkei dropped almost 8%. European markets, London's FTSE 100, Germany's DAX, all took big hits. Just a sea of red across the board.
And what's interesting is how the U.S. administration is spinning this.
Yeah.
Trump is calling the tariffs medicine for the economy. Sometimes you got to take your medicine, that kind of thing.
So short-term pain for long-term gain.
That seems to be the argument.
Yeah.
But a lot of people are really worried that this isn't just a temporary blip. We're seeing a lot of concern about a potential global recession. JP Morgan raised its probability of a U.S. recession to 60%, which is pretty alarming. And people like Lawrence Summers, former Treasury Secretary, are saying this could be the most damaging economic policy since World War II.
Yep.
I mean, those are some really serious warnings.
Yeah, so medicine might be one way to put it. Others might say it's more like playing with fire.
So let's break down how some of the key players are reacting, starting with China. They came out swinging, didn't they? Oh, yeah. They hit back hard fast, 34% tariff on U.S. imports right out of the gate. But they didn't stop there. They banned exports of 16 rare earth elements to the U.S., which are crucial for all sorts of tech and manufacturing industries. They put 11 U.S. firms on an unreliable entity list, which makes it really hard for them to do business in China. They launched an anti-monopoly investigation into DuPont, and they even stopped importing U.S. chicken products.
Wow, they really covered all their bases. So is China basically shooting itself in the foot here? I mean, their economy isn't exactly booming right now, is it?
That's the question, isn't it? Some people are saying that China is more vulnerable than they're letting on, and that this could really backfire on them. especially with their youth unemployment being so high and people already feeling the economic pinch. But on the other hand, China has this whole dual circulation strategy that they've been working on for years. The idea is to make their economy less reliant on exports and boost domestic demand.
So they might be more prepared for this kind of standoff than we think.
Exactly. And Xi Jinping is clearly thinking long-term. He's not going to back down easily. Plus, with these new tariffs, the total rate on Chinese goods going into the U.S. could reach almost 60%. That's a huge increase in the cost of doing business. So yeah, it's a risky move for China, but they're not backing down. But, amidst all this back and forth, China is also trying to reassure foreign companies that they're still open for business.
Right. We heard from one of their top officials about that.
Yeah, Vice Commerce Minister Ling Ji. He was basically saying, don't worry, we're still a good place to invest. Trying to strike that balance between being tough and staying open for business. So what about the EU? What's their take on all of this?
Well, it seems like they're playing a more strategic game, more of a calculated response.
Yeah, it looks like they're going with a two-stage approach. The first phase is pretty straightforward. They're going to reinstate the tariffs on steel and aluminum that they had before, and then they're going to hit back with tariffs on a bunch of classic American products. We're talking bourbon, Levi's jeans, Harley-Davidson motorcycles, soybeans, even peanut butter. Stuff that's really symbolic of America. This first package could hit about $8 billion worth of U.S. exports, and they're probably going to roll it out by mid-April.
So a targeted strike, right to the heart of Americana. And what about phase 2?
Well, that one's a little more interesting. They're looking at targeting digital and financial services, areas where the U.S. actually has a surplus with the EU. That could affect something like $18 billion worth of U.S. goods. And if they go after the big U.S. tech companies, it could really escalate things. I mean, we're talking about potentially disrupting the operations of some of the most powerful corporations in the world.
So this is all going to have a pretty big impact on the EU economy as well, right?
Oh, absolutely.
Yeah.
Estimates are suggesting that these tariffs and the counter-tariffs they'll inevitably trigger could knock off something like 0.3% of the Eurozone's GDP growth over the next 2 years, which might not sound like a lot, but it's not insignificant. It could mean slower job growth, less investment, and an overall dampening of economic activity.
And beyond the economics, this has to be a pretty big political blow to the EU, right? I mean, the US is their biggest ally, and this is just the latest in a string of disagreements and tensions. The digital tax fight, the whole Greenland thing, now this.
Right. It's definitely causing some soul-searching in Europe about the future of the transatlantic relationship. And what's really striking is how united the EU is on this. Even governments that were seen as friendly to the previous U.S. administration, like in Italy, are condemning these tariffs. That shows just how serious they're taking this. They're not happy about this at all.
Yeah, it seems like the honeymoon is definitely over. So what are the key players in the EU saying about all of this? We heard from Ursula von der Leyen, the European Commission president.
Yeah, she basically said that the EU is ready to fight back, that they're acting from a position of strength. But she also said they'd rather find a negotiated solution. And she even acknowledged that they share some of the U.S. concerns about unfair trade practices. So there's a tiny sliver of hope for dialogue there, but it doesn't seem very likely right now.
And we also heard from Macron and Meloni. They didn't mince words.
No, they didn't. Macron actually urged EU businesses to stop investing in the U.S., which is a pretty drastic step for a leader of his stature. And Meloni just straight up said the tariffs are wrong. The EU is also considering using this new anti-coercion instrument they have, which could give them even more options to retaliate. But that seems like a last resort at this point. They're really hoping to avoid a full-blown trade war. So let's zoom out a bit and look at how this is playing out in other parts of the world. India seems to be in a surprisingly good position, all things considered.
Yeah. How did they manage to dodge the bullet, relatively speaking?
Well, for one thing, they ended up with tariffs somewhere in the middle of the pack. And some of their biggest exports to the U.S., like pharmaceuticals and most energy products, were left out of these new tariffs altogether. Even gems and jewelry, which is their top export to the U.S., might not be too badly affected, depending on how sensitive prices are in that market. And to top it off, some of India's main competitors in textiles are actually getting hit with much higher tariffs.
So in a way, these tariffs could end up giving India a bit of a boost in certain sectors. What about Southeast Asia?
It's not looking so good there. Countries like Indonesia and Vietnam are already looking at diversifying their trade away from the U.S. They're strengthening ties with each other, within ASEAN and with other countries in the region. Vietnam in particular is going to feel this pretty hard, and that could disrupt supply chains for all sorts of consumer goods in the U.S.
And Latin America, they got hit with that blanket 10% tariff, right?
Yeah, most of them did. Basically because the U.S. runs a trade surplus with most countries in that region. Now, Mexico and Canada got a pass because of some previous IEPA decisions related to fentanyl and migration. So they're in a slightly better spot, but they're still dealing with existing U.S. tariffs on cars, steel, and aluminum.
It's kind of ironic, right? Having a free trade agreement with the U.S. didn't really protect them from these new tariffs. What's the point of those agreements if they can just be overridden like this?
It definitely raises questions about the effectiveness of those agreements in this new world order. Brazil, for example, even though the U.S. has a surplus with them, they still got hit with that 10% tariff. And they're already worried about U.S. tariffs on their steel and aluminum. This whole situation might actually push them closer to the EU and that Mercosur trade deal that's been in the works for ages. Then you have Colombia, which is in a decent position because they actually have a trade deficit with the US, but their coffee and flour exports could take a hit. Although, ironically, they might benefit from the higher tariffs on Vietnamese coffee. It's a really mixed bag.
What about Peru and Chile? They have FTAs with the U.S. too, right?
They do, but those agreements aren't worth much in this new landscape. Their agricultural products, manufactured goods, apparel, everything is now subject to that 10% tariff. It's like those FTAs never existed. And then you have Africa, which is probably going to be the hardest hit by all of this, especially those countries that rely on AGOA, the African Growth and Opportunity Act, which gives them duty-free access to the U.S. market for a lot of their products.
Yeah, I was reading about that. Some of those countries are facing some really steep tariffs.
Oh yeah, Lesotho, for example, they're now looking at a 50% tariff on their textile exports. Madagascar could see really high tariffs on their vanilla exports. Kenya, which has a huge apparel industry, is going to be severely impacted. And the head of the AFCFTA, the African Continental Free Trade Area, is even warning that AGOA could be repealed entirely. So we're talking about potentially devastating consequences for some of these countries. They could see massive job losses, increased poverty, and all sorts of other problems.
It's really a reminder of how interconnected the global economy is and how these kinds of actions can have ripple effects all over the world. And finally, we have the Middle East. What's the situation there? I know Iraq was mentioned specifically in some reports.
Yeah, well, the direct impact on Iraq is probably going to be minimal because most of what they export to the U.S. is oil, and that's exempt from these tariffs. But they could still be affected indirectly if the global economy slows down and demand for oil drops. That could drive down prices, which would hurt their revenue. So even though they're not directly targeted, they're still caught up in the crossfire.
So all of this is happening against the backdrop of, let's just say, some interesting dynamics within the Trump administration itself. There seem to be some pretty big differences of opinion about how this is all going to play out.
Yeah, there's definitely some tension there. You've got Treasury Secretary Bessent hinting that they might be open to negotiations, but then you have Navarro, who's basically Trump's top trade advisor, taking a much harder line. He's predicting a bullish boom for the U.S. economy, which seems pretty out of touch with the reality of what's happening in the markets. It's a real head-scratcher.
Right. It's hard to reconcile those two viewpoints. And then you have Elon Musk, who now heads up this new Department of Government Efficiency, weighing in as well.
Yeah, he came out in favor of a zero tariff zone with Europe, but Navarro basically shot him down, saying that Musk, as a car seller, doesn't understand trade policy, which is kind of ironic considering that Tesla itself has warned about the dangers of tariffs in the past. So even within the administration, there's no clear consensus on the best way forward.
It's a real mess. So let's step back for a moment and try to put all of this in perspective. Historically speaking, these tariffs are a pretty big deal, aren't they?
Huge. I mean, we're talking potentially the highest average tariff rate in the U.S. since 1909. Higher than Smoot-Hawley, which is pretty much the poster child for bad trade policy. And it's a real reversal of the trend we've seen over the last century, where income tax became the main source of government revenue and tariffs were gradually lowered. This is basically turning back the clock.
And what are the economists saying about the potential long-term consequences of all of this?
Well, the Yale Budget Lab is predicting that these tariffs could raise consumer prices in the U.S. by as much as $3,800 per household every year. And they're saying it could shave off 0.9 percentage points from U.S. economic growth. Morgan Stanley is now saying there's a 40% chance of a U.S. recession and a 30% chance of stagflation, which is basically a combination of slow growth and high inflation. They're even saying that the Federal Reserve might have to raise interest rates because of the inflationary pressure from these tariffs. So the outlook is pretty grim.
Yeah, not exactly a rosy picture. So to wrap things up, what are the key takeaways from all of this?
Well, I think the main takeaway is that these Liberation Day tariffs are a really significant shift in U.S. trade policy, and they're already causing chaos in the markets and triggering retaliation from all over the world. The long-term consequences are still unclear, but the early predictions aren't good. We could be looking at higher prices, slower growth, and maybe even a global recession.
And for everyone listening, this isn't just some abstract economic theory. This is going to affect all of us in very real ways. It could change the prices we pay for things, the availability of products, and even the relationships between countries. So it's important to stay informed and to think about the potential consequences of all of this.
Absolutely. And here's a question for you to think about as we leave you today. Given all the different opinions and predictions we've heard, what do you think is the most likely scenario for how this all plays out? And who do you think will end up paying the biggest price for these tariffs? Because ultimately, someone is going to have to foot the bill for all of this.
It's a lot to think about, that's for sure. Well, thanks for joining us for this deep dive into the world of tariffs and trade wars. We'll be back soon with more analysis and insights on this and other important topics. Until then, stay informed and stay engaged.
Thanks for listening, everyone.
See you next time.